Hi everyone, it's PJ Patterson here with a market update. Lots going on in the markets. I want to have a chat today about a couple of things: politics, consumer, what's happening with the consumer, a little bit on interest rates, the Royal Commission results that have just come out. It's going to be very interesting for the mortgage broking industry, and I thought I'd just share my thoughts on that with you. Because I think there's unfortunately a lot of misinformation going on. And also, I'm just going to preview quickly an interview that I did for a podcast with David Bassanese, who is the chief economist at BetaShares. BetaShares is a firm that I use quite a bit for investments for my clients, and he was gracious enough to give me his time today, about 40 minutes of his time, to shoot a podcast. So I will send that out under a separate link to you, so that you can consume that and hear what his insights were. So let's kick it off with politics. One of the things that is currently going on in Australia is we have a lot of political uncertainty. I think that I may have mentioned this before, but whether you're a Labor supporter or Liberal supporter, for me, all of these people are just nut jobs. I don't understand where all the statesmen have gone, the Reagans, the Thatchers, the John Howards, the John Majors. That group of leaders, in my opinion, were probably the last great statesmen and stateswomen of their time. Now, unfortunately, everybody is just looking at the political cycle and getting reelected. And I fear that the long-term thinking that we need from our political leaders just isn't there. So what happens, I feel, is that we sacrifice what might be good for the country long term because it may require some short-term pain just so they can get reelected. It's just ridiculous. So I try to be apolitical. I don't want to say, I want to support candidate A, candidate B, party A, party B. All I would ask you to do is to really, in this election cycle, which I think is going to be critical for Australia, is to please dig into the issues. Don't let the headlines and the things that are emotive and sensational guide you to vote in a certain way. Please, dig into some of the issues that you feel are important and vote accordingly. For me, I would be suggesting that our economy and making sure that Australia has a strong economy would have to be one of the top priorities. And I also think that, not that any of these guys and gals in politics use this language, but I think Australia somehow has to really establish itself as a fantastic global citizen. And I don't know how to do that exactly, but I think it starts with the messages that we send to our politicians via our vote. So that's probably all I really want to say on politics, except for I do think we're in a phase right now, because of the elections looming, both state and federal. There's a lot of uncertainty. Businesses are holding back on investment. The economy is probably in large part going to be sluggish up until we get the results of the election. So what political party will be in majority government, and what are their policies? What are they going to do to us is probably the most polite way I can put it to you. So that's really all I really want to say about politics in Australia. Obviously, the ongoing show with President Trump continues. I've written about this quite a bit in the past. I know he's quite an interesting and entertaining character. And I tell you what, if you really want to get an insight into how Donald Trump thinks and why he does some of the things he does, if any of you have Netflix, it's probably on Stan and some of the other pay to watch services. There's some shows around Donald Trump that have been produced, and I forget the name off the top of my head of the Netflix one, but if you just go into the search engine and just type Donald Trump, you'll probably get the show. Really, really interesting, fascinating, this guy's life. And watching that, I think it was about a 4 or 5 part series on Donald Trump. It really educated me on why he's doing some of the things he's doing. So anyway, I thought I'd just mention that. Turning to the consumer, as I mentioned a moment ago, I had an interview today with David Bassanese, the BetaShares chief economist, and we talked about a number of things: housing, interest rates, the stock markets, the RBA, Federal Reserve, etc. And one of the things he pointed out was that the Australian consumer at the moment is driving about 60% of our economic activity. And I've spoken about this before, but we have, or I should say, we are in an environment right now where credit is very tight. For any of you that are listening that I have been arranging mortgage finance for recently or have arranged mortgage finance for, you know that it has been a struggle, and the banks and any lender for that matter are just crawling all over everything. It is very tough out there. I did a presentation on Monday night, actually, at a property investment group. And one of the things I discussed was the fact that at the moment, about 40%, this was a statistic that came out recently, 40% of all home loans applications, I should say all home loan applications, are being rejected by the banks. It is an astounding statistic. And when you delve into that, the breakdown of that would be, I believe about 60% of those are refinance applications. So about 60% are refinance application rejections. And the rest of it is investors, people looking for investment loans, first-time home buyers, and people who are upgrading. So it's tough out there, is all I can really say. And so if you are thinking about borrowing money, or if you have purchased an off-the-plan property or anything to that effect, I would suggest you need to be very cautious right now. And I hope that your personal balance sheet and your personal income statement are strong enough that if the property market continues to deteriorate or something continues to happen with bank lending, that you will certainly be able to get a loan. Most of the clients that I work with, I think all of you are, very financially stable and sound. So I think, you'll probably have success there, but it will be a struggle. So the other thing I might just say to you is start the process early. David Bastianini's had some interesting things to say around interest rates. I'm not going to spoil that podcast that will be coming out shortly. It will be published in the boardroom. So if you're not a boardroom member, then be sure to ask to join the Facebook group, the boardroom, and or look to consume that media on my YouTube channel, as well as the Money Matters podcast. So have a look at that. Now, let's talk about interest rates, because this was another topic that David discussed, and I found it quite interesting. So I am going to give you a little tidbit into that. We talked about U.S. interest rates, and we talked about Australian interest rates. Now, interestingly, he shares my view that we may very well see 2 interest rate rises in the U.S. this year. Now, I actually said I think there will be one more, but he reckons there might be 2. Now, obviously, this is just a prediction. We have nothing to suggest that is a lock, a lay down is there. But as I've written about before, the U.S. Federal Reserve is going to, the only policy tool they really have to affect economic policy is the raising and lowering of interest rates. Quantitative easing and tightening are part of that, and they sort of have that tool now, but setting the price of money is really their biggest tool. And so what they have to be able to do is create enough of a gap between interest rates that they can cut to have an effect on the economy. So in other words, if rates are at 2% and we have a global financial crisis, they can only cut them to 0. But if rates are at 4% or 5%, then they have a lot of interest rate that they can cut. They can cut from 5 to 2 or 5 to 1 or whatever. So I just think that the Federal Reserve, yes, the market threw a temper tantrum in December. I've discussed that, I think, on my last update. The economy in the U.S. is doing pretty well. Labor market is reasonably tight over there. So the fact that they've said they're going to be data dependent in their January statement and even in their February meeting is fine, and the market liked that. But the reality is that quantitative tightening is still underway, and I think we, again, will still see potentially some interest rate increases this year. So I'm not going to, again, spoil much of what David had to say. He's got some really great points that are very interesting on that. And what I'll do is I'll give you a little teaser. He actually said something about Australian interest rates that's really surprised me. So I'm going to leave it at that for you to go and consume that podcast when it comes out. Now, I want to just quickly update you on the Royal Commission. Royal Commission came out with their release yesterday, and unsurprisingly, they have called out a lot of this bad behavior on behalf of banks. But something that they have done, I think, is going to seriously impact, if these recommendations are followed through by the government, are actually going to seriously impact you as a borrower. So they have suggested that brokers, so mortgage brokers and finance brokers, should have their trail commissions cut and should have their upfronts cut, and that you, as the borrower, would pay directly the mortgage broker for organizing a loan. Now, I can tell you without any shred of doubt in my mind, that if the government, whether it's Labor or Liberal, adopts those two recommendations, the mortgage broking industry will cease to exist. It will simply cease to exist. It will not be a service that is able to be funded, a business, I should say, that's able to be funded any longer. And that initially you might go, well, what's the big deal? I'll just go to the bank. But what will happen to you, and you must understand this, is, first of all, you will lose access to a great body of knowledge around finance broking. So hopefully, fingers crossed, for all of you that I have arranged loans for, you have felt that my advice and my guidance in the process and the help that I've given you along the way, with whether it be with a solicitor or with some advice around the transaction or dealing with your real estate agent or whatever the case may be, has been helpful. It has added value to the transaction. You're going to lose access to that expertise, or at least it's going to be harder to find. And secondly, of course, you'll have to do all the heavy lifting. You're going to have to do all of the stuff that I do for you, which is to package the loan, put it together, make product recommendations, do all of that. That will now fall on you to do that as a consumer. And I dare say what it's going to do is it's only going to give the banks more power to price, and they will not offer the same pricing that brokers are often able to obtain for their clients. And it will take us back to the pre-Wizard and pre-Aussie days when the bank's margins were huge. And I think that is obvious that's a potential outcome in the fact that yesterday the banking stocks went ballistic. They were up probably 2, 3, 4%, and the mortgage broking companies like Mortgage Choice got slammed. I think Mortgage Choice was down 25% yesterday, and there were probably some other fatalities in that space as well yesterday. So if you haven't paid any attention to the Royal Commission, and this is all news to you, then that's fine. If you've kind of been paying attention to the Royal Commission and you know some of these outcomes, I applaud you for being informed. But please do know that those recommendations, some of those recommendations around the broking industry, are really going to hurt you as a consumer, and I think you need to be aware of that. Obviously, the law has not been changed. There's still, quite a bit of time is going to pass between now being the release of the Royal Commission results and any legislative changes. So we'll see if in the final analysis, if the government, again, whether it's Labor or Liberal, pick up these recommendations and enshrine them in law, or if it's something in between, we don't know. So we'll see. But I can tell you, my industry right now is in panic mode, and I think the consumer should also be somewhat worried about that. So that's really it for the update today. Markets, I guess the final thing I'll say is markets continue to sort of go sideways here. We had a nice bump off the lows that were seen in December. January has passed. We've had about a 10 to 12% recovery in the markets, which is nice. But I think that continued quantitative tightening and one serious issue that's coming along now is companies are revising earnings lower. So this is both in Australia and overseas in the U.S. markets and in Europe. So there's still a lot of stuff out there that can jump out to bite us. I'm still not willing to allocate capital to the markets, to the equities markets, until we get probably another few months into the year and we really see what's going to happen. So from that point of view, markets and the way I'm approaching markets has not changed. On your screen right now, I wanted to share with you one of the resources that I use to formulate a lot of the opinions that I pass on to you. And that is a website called King World News. I would strongly encourage all of you to have a look at this website, put it in your favorites, and go to it on a daily basis to see what sort of pieces are out there. King World News is very supportive of the gold theory that gold is an essential asset to own, and that right now we're in an environment where gold is a key asset that you should hold. But there are some incredible interviews on here and some incredible pieces from people that you would not necessarily have heard of, but some exceptionally smart people, billionaire investors, all of that sort of thing. It is a tremendous resource. Please check it out. It is what I would classify as an alternative media source, and I think you'll like it if you do check it out. So, guys, that's it for this update. I hope you're all doing well, and everyone's back to work and enjoying getting stuck into 2019. And I'll shoot you an update soon, next week, probably around the same time, with any further updates. Have a good week.